In a world where the gap between the rich and the poor continues to widen, we find ourselves asking, why do the wealthy seem to get richer while others struggle to make ends meet? It's a question that has puzzled economists, sociologists, and everyday people for generations. Today, we're going to unravel this complex phenomenon and expose the hidden mechanisms that keep the rich on top. Imagine a game where the rules are constantly changing, but only a select few know when and how they'll change. That's the world of wealth accumulation we live in today. The rich aren't just playing the game, they're shaping it to their advantage. But how do they do it? What secret knowledge or hidden advantages do they possess that allows them to consistently grow their wealth while others fall behind? The answers might surprise you, frustrate you, and even make you question the very foundations of our economic system. From tax loopholes to political influence, from inheritance to exclusive education, the wealthy have access to tools and opportunities that most of us can only dream of. But it's not just about having more money to invest. It's about a system that's designed to reward those who already have wealth, creating a self-perpetuating cycle of prosperity for the few. As we delve deeper into this topic, you'll discover shocking truths about how the rich leverage their wealth to gain even more. You'll learn about the power of compound interest, the impact of social networks, and the ways in which the wealthy influence policy to protect their interests. But this isn't just a story of numbers and statistics. It's about real people, real families, and the very real consequences of a system that seems to be stacked against the average person. It's about dreams deferred, opportunities lost, and the growing frustration of those who feel left behind in an economy that seems to only benefit the elite. So let's start by examining one of the most powerful tools in the wealthy's arsenal: compound interest. It's often called the eighth wonder of the world, and for good reason. While it might seem like a simple concept, its impact on wealth accumulation is nothing short of extraordinary. Imagine two individuals, Sarah, who starts investing $500 a month at age 25, and Michael, who begins at 35. By the time they reach 65, Sarah will have nearly twice as much money as Michael, even though she only invested for 10 more years. This is the magic of compound interest, and it's a game changer for those who can afford to start early and invest consistently. But here's the kicker. The wealthy don't just benefit from compound interest on their investments. They apply this principle to every aspect of their lives. Their social connections compound, leading to more opportunities. Their knowledge compounds, giving them insights into market trends before others. Even their political influence compounds, allowing them to shape policies in their favor. Speaking of political influence, let's talk about how the rich use their wealth to bend the rules in their favor. It's not just about campaign contributions, although those certainly play a role. It's about shaping the very structure of our economic system. Take tax policy, for instance. Did you know that in many countries, including the United States, income from investments is often taxed at a lower rate than income from work? This means that someone who makes millions from their stock portfolio might pay a lower tax rate than a teacher or a nurse. But it doesn't stop there. The wealthy have access to teams of lawyers and accountants who can find every possible loophole and tax shelter. They can afford to set up complex trusts and offshore accounts to protect their wealth. And when new tax laws are written, guess who has a seat at the table? It's not the average worker, that's for sure. This brings us to another crucial advantage the rich have: access to information and expertise. When you have wealth, you can afford to hire the best advisors, attend exclusive conferences, and tap into networks of other successful individuals. This gives the wealthy a tremendous edge in identifying investment opportunities, anticipating market trends, and avoiding pitfalls. But perhaps one of the most significant advantages the wealthy have is their ability to take calculated risks. When you're living paycheck to paycheck, taking a financial risk could mean not being able to pay rent or put food on the table. But when you have a substantial financial cushion, you can afford to take chances that could lead to enormous payoffs. Think about it. Many of the world's most successful companies were started by people who already had significant wealth or access to it. They could afford to pour money into their ideas, weather early setbacks, and persist until they found success. For the average person, one failed business venture could mean financial ruin. For the wealthy, it's just a learning experience on the path to greater riches. This ability to take risks extends beyond just starting businesses. The wealthy can afford to invest in high-risk, high-reward financial instruments that are often off-limits to average investors. They can put money into venture capital funds, private equity, and hedge funds that have the potential for astronomical returns. But it's not just about having the money to invest, it's also about having the right connections. Many of the best investment opportunities are never made public. They're shared within exclusive networks of wealthy individuals and institutions. If you're not part of that club, you're simply not going to hear about these opportunities until it's too late. This brings us to another crucial factor: education. Now, we're not just talking about formal schooling, although that certainly plays a role. The children of the wealthy often attend elite private schools and universities, giving them a leg up in the job market and valuable social connections. But beyond that, wealthy families tend to pass down financial literacy from an early age. Children in these families learn about investing, compound interest, and wealth management, while many of their peers are still struggling with basic budgeting. This early education creates a huge advantage that compounds over time. Moreover, the wealthy have the resources to continue their education throughout their lives. They can afford to attend expensive seminars, hire personal coaches, and take time off work to learn new skills. This continuous learning allows them to adapt to changing economic conditions and stay ahead of the curve. Now let's talk about a topic that often makes people uncomfortable: inheritance. While we like to think of ourselves as living in a meritocracy, the truth is that a significant portion of wealth is simply passed down from one generation to the next. Inheritance doesn't just provide a financial head start. It often comes with invaluable social connections, access to family businesses, and a safety net that allows for greater risk-taking. Even if an heir doesn't directly receive a large sum of money, they might benefit from paid-for education, help with a down payment on a house, or introductions to influential people in their chosen field. But the advantages of inherited wealth go beyond the obvious. Wealthy families often use complex legal structures, like trusts, to pass down wealth in ways that minimize taxes and protect assets. These strategies are usually out of reach for the average person, both in terms of knowledge and affordability. This brings us to another crucial point: the power of assets. The wealthy don't just have more money in their bank accounts. They own things that appreciate in value over time. Real estate, stocks, businesses, these are the engines of wealth creation that keep working even when their owners are sleeping. Consider this: if you own a house in a desirable area, you're likely building wealth just by living there as property values increase. If you own a successful business, it's generating profit and potentially increasing in value. If you have a large stock portfolio, it's likely growing year after year, especially if you can afford to weather market downturns without selling. Now contrast this with someone who rents their home and works for a salary. They might be working just as hard, if not harder, but they're not benefiting from the appreciation of assets. Their wealth-building potential is severely limited. This difference in asset ownership leads to another advantage: leverage. The wealthy can use their assets as collateral to borrow money at favorable rates. They can then use this borrowed money to invest in more assets, creating a cycle of wealth accumulation. For example, a wealthy individual might use their stock portfolio as collateral to take out a low-interest loan. They could then use that loan to buy a rental property, which generates income and appreciates in value. The rental income pays off the loan, and they're left with a valuable asset that they acquired using someone else's money. This ability to use leverage magnifies returns when investments perform well. Of course, it also magnifies losses when investments go sour, but the wealthy often have enough diversification to weather these storms. As we've seen, the reasons why the rich get richer are numerous and complex. From compound interest to political influence, from inheritance to leveraging assets, the wealthy have access to tools and opportunities that create a self-reinforcing cycle of prosperity. But what does this mean for the rest of us? Are we doomed to watch the wealth gap widen indefinitely? Not necessarily. Understanding these mechanisms is the first step towards change. By recognizing how the system works, we can begin to advocate for policies that level the playing field and create opportunities for wealth creation across all levels of society. It's crucial to remember that the rules governing wealth accumulation are not laws of nature. They're human constructs that can be changed. By pushing for more progressive tax policies, better financial education in schools, and regulations that prevent the abuse of political influence, we can start to create a more equitable economic system. Moreover, while we may not have access to all the tools of the wealthy, we can still apply some of their strategies in our own lives. Understanding the power of compound interest, focusing on acquiring assets rather than just earning a salary, and continually educating ourselves about financial matters are steps we can all take. The path to a more equitable society won't be easy, and it won't happen overnight. But by shining a light on these often hidden mechanisms of wealth accumulation, we can start to have more informed conversations about economic inequality and work towards solutions. Remember, knowledge is power, and now that you understand why the rich get richer, you're better equipped to navigate the financial world and advocate for change. The question is, what will you do with this knowledge?